Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thank you, Marty. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis. In the intraday developing timeframe, it's about the business of trading. It's based on structured trades. These are available to all of you in the Bookmap Discord TraderLab community. There's no cost for this, and it's really about understanding the business you're embarking on. And it doesn't matter how long you've been in the business. What does matter is to get a better understanding of the business, the obstacles that face all of us, the emotional aspects of this, and the obstacles that our primal wiring puts in front of us to impede us or protect us from risk, in spite of the fact that we have to take risk. So we're pushing back against our psychology, and we're also, because of that psychology, continually stimulated by the chemicals that are released in our brain. So it's not really so much as making the decision to do something. Why is it that when you promise yourself you won't do behavior that is not in your best interest, you still do it? What is that all about? If you don't understand these mechanisms, how can you solve for them? In addition, the market is a random environment. In spite of our need to be right and seek confirmation, all of those elements are risk avoidance. So we are wired to avoid risk, yet we're in a business of seeking risk. The difference is intelligent risk. So if you're in a random environment, how do you define intelligent risk? Well, I think it might be intelligent to only engage in the market when you have an edge. And an edge is the same way that gaming operates. So we can either be gamblers, and that's fine. But I see gambling as a little bit more like entertainment. Go to the casino, drop whatever on the table, have a great time, go with your friends, and be sure to get the cocktails and the ticket to the buffet. But the house on the other side of the table, they only play games that have an edge. And that's really, even though they pay the gamblers, that's really the business we're in, because they extract the dollars over time in a random distribution of outcomes from those gamblers, even though the gamblers have winning hands. So when we lose on a trade, it's a failure for us. When the house pays the gamblers, it's cost of production and overhead. How do we differentiate our emotional states and then how we respond to it to what our business actually is? So we have to separate those two. And it's very difficult for us to do that because we can never get rid of our primal wiring, if you know what I'm saying. So we have to bring these pieces together and get them to work together and try to manage as best we can, still being human, in spite of our desires, to park that emotional aspect of ourselves and lock it away. We cannot. So now we have to find a way to work with it. That's part of what the TraderLab is about. And of course, the TraderLab community is a group of like-minded traders who have come together to leverage their collective experience. So this is really about the business of trading. And if you're interested in that, use the link in the bottom of YouTube, visit the TraderLab. Now I'm going to give you some statistics and a couple ideas about today. So grab your pen and paper. If you're interested in what you see here, I do the same process every day. The market's random. I attempt to stay consistent. It's the only way I can measure my results and potentially the only way you can measure yours. So grab a pen and paper. We're going to do a couple of numbers, and then we're going to look at the market condition. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes, but if we get into real time, as always, we'll discuss the trades as they unfold. By the way, there's 60 PDFs of structured trades, along as well as a series of webinars and a document section in the Bookmap Discord TraderLab community. This is what they look like. There's 60 of these. These are actual trades or screenshots. And these, I'm not a vendor. There's no cost for this, but these are trades that other traders were asking me what I was doing, So I threw some things together, and these are actual trades. And you could just get some ideas. These are not, there's no plug and play in trading, guys. I know we all wish there was. Me too. You know, but not so much. And of course, maybe there is for you. Now, let's take a look at this. This is yesterday's RTH. These are RTH candles. Here's some important information. I'm going to keep this as brief as I can. 50 was the target on the, now this is the all-time high, and we had the get out of jail free card, see you later, and we came down to, and 50 was the target. We missed it by just a little bit. And then we came back in, okay? Yesterday, we had what's called an inside day. Now, 17 was our resistance, and we just missed it by what does they call it? A smidge, a little bit, and but we're inside. We also tested the value area high, where most of the volume took place on this day, and in this range, and I'm going to show you another way to look at this. There was something, because of the acceleration and the velocity of the move down, it left something called the low volume zone. So on this day, so this is the day down, and then yesterday, the inside day, the anticipation was to come back and work in that area. And the other part of an inside day is it's really a rest day. Both sides are in here and they're just sort of yawn, lean back. I need a break. You ever done that? After running a marathon? Yeah, I need a rest. So then, for today, what is important today? 65.03 is the retail or fair price for yesterday. But what we know is the market can come out either side. So let's look at some statistics. First of all, we're opening in yesterday's range in value. So right in here. Okay. And what does it mean? The market's in balance. So likely there's going to be potentially either a neutral or a low conviction day. So then what happens? Do we break out of value? What happens? Now, value is this little box. I'm going to show you this. So we know there's buy stops up here, there's sell stops under here. The market can do either or nothing or both. So initially, coming in, I was looking for the long side. Now I'm going to show you that, and I'm going to give you some statistics. So let's just look a little more. Getting a little out of it here. Let's try it this way. So let's look at this another way. Now, this is too low. That orange line is the highest volume for each RTH day. Too low. Market goes up. Now, you'll notice this day is rotational. This is the retail price here, so fair price. When I say retail, think shopping. Then we have a trend day up, and this is important because we open, we test value area high. That's what this is, and it's too low, and then we get our trend. And this trend up leaves something called singles because it's urgent. So the possibility exists at some point to return to this. This is our open, our new all-time high, and we accelerate down and take all of this out. Now that leaves a low volume zone here. Now yesterday we test the outside edge of this and this volume or value area, and we come up and we are now auctioning this low volume zone. And the way the market tends to work is it wants to figure out what's too high, what's too low, and what's fair. But if we don't have an auctioned area, often, and I use the term often, the market will come back and check it. So we come back in, and what was too high previously? 17. 17 turns out to be right near 17, the high of the day. Now, nobody knows that. We could have just as well come up here. So for me, The targets yesterday were 23 to 25, 17 on the upside. This was on the downside, and it could have come down here. These are the things we don't know, part of the thrill. And then 6503-ish. Okay, so 6503. So it kind of gives us our range. So initially this morning, and I'm going to give you a little tidbit here. Note this is a full session profile. Now this is that low volume area I was just telling you about. And this is full session, so some of this would not necessarily be here in the RTH, but you get the idea. Yeah, this is yesterday. Notice what we did in the ETH. The ETH low was here, and we tested that retail price. Too low. That sets up the long side. And this is the full day. And we got up to like 17. Remember where that resistance was. So this is yesterday. So now this sets up, let's look at today's ETH. We test this in the ETH. So this is the ETH low. Then what we're looking for is, let's look at the similarities. If that's too low, we might come up. If this is too low, we might come up. Okay? So, and then that sets up the possibilities of taking out yesterday's RTH high or low. And let's talk about statistics for a moment. Grab your pen and paper. So where did we open? Great question. Where did we open? One moment. 507 quarter. So we opened right here. So you can't see that it's covered up. So we opened at 507. So we opened near settlement. We're above the 03. That's the highest volume price from yesterday. This was the test of the ETH low, too low. Okay, so far. Now this is the open. Now we're not, remember this is trading. This is not predictive. This is like, maybe they'll do this, maybe they'll do that. I don't know. So we'll see you later. Value area high is here. So we're opening in range, in value, and slightly higher. So let's look at the statistics. And if you're in TraderLab, you grab your statistics sheet, and now you'd start looking. So the probability of taking out the first hour's high or low, because we're opened higher in range, is 98% probability. And guys, past performance is not indicative of future results. You got to vet all of these, everything. And of course, in trading, statistics are only possibilities or probabilities. Nothing is cast in stone in trading. It just gives you something that maybe other traders don't have. But the fact the market is going in a direction and there's a statistic, it is a target. The market never has to get there. None of this is rigid. One thing about trading, you got to be fluid, and you cannot have a bias or become myopic. And I understand that's hard for us because it's very easy to think it's going to do X. Well, I don't use the term it will. I only have maybe, which means it might. And write that down. The best you have is maybe. If you're in the prediction business, open up a fortune teller store. They do pretty well. But we are not fortune tellers. We are in the business of alignment. So it's just a personal perspective, but I used to think I knew where the market was going to go. And I use measured moves, and I would quote predict or Fibonacci, or any of those things. They all work randomly. So I would predict, and it gave me a sense of confidence. Well, what I realized was I was grabbing onto prediction in order to overcome my fear. I was looking for certainty where it didn't exist. So over time, I started throwing all these things away that were feeding my need to be right, where they really were just random. So I want to tear randomness out of this equation. I've still got randomness in the market. Why do I need to add things in there to keep me fixated and biased? Doesn't work in trading, at least not for me. So taking out the ETH high or low, 97% probability. Taking out the previous high or low. Now, this is an important statistic. And as I mentioned, my first inclination was to go for the high, but we'll see why. 82% probability to take out the previous high or low. And the ETH volume point of control, 81% probability. ETH high, 76% probability. ETH mid, 75% probability. Previous point of control, 68%. And then taking out the initial balance high or first hour's high, 66. The skew is more or less to the upside. So now this is prior to the open. So for me, it was about getting long. Now the problem, of course, is where, but now this is where the condition of the market comes in. The condition of the market yesterday is two-sided trade. What else do we know? We know we have significant reports coming out starting tomorrow, with a crescendo on Friday of University of Michigan, UOM pre, which is a pretty significant report, but we got CPI. We got all kinds of fun stuff coming up here. I mean, I suggest everybody wear a helmet. Now, one of the things I've observed, and this is just ancillary, and anything can happen when you have these inputs, fundamental inputs, reports, change or disrupt the auction. So the market's going to do its thing. And if there's an input that surprises the market will make a substantial move potentially, and then find a new area to do its thing, and then look for too high, too low. When the market's in balance, we can anticipate. That's what inside days are. Nobody's really running with the ball. It's both sides active, and it's sort of a neutral state. That was yesterday. Well, you're going to have buyers and sellers on each side of the high and low with stops. The market can go into either side and then come back in. So, and again, we don't know. So starting out, I was looking for long. So I just want you to see that. Now, the fact that we're opening where we're opening makes me extremely cautious. And I would say patient, because this is where it's very easy to get abused and chopped up. And I hear many traders say, I got chopped up. And what I used to think, of course, was, yeah, I got chopped up. But what I figured out was I didn't know how to trade the condition, and I would be flip-flopping like a flounder because I didn't understand the condition of the market. The market is not a plug-and-play generic process. You do have to adapt, and you do need to know what it means. When we open in value and in the range, it means that nothing has really changed. I know this is too low at the moment because we tested it in the ETH low, so I know that. And I know if I come outside, I have the potential, let's look at our targeting, to get to the ETH mid. And what was that probability? Let me come back. 75%. And the overnight volume point of control, 81, almost 82% probability. Then I have coming up here, and I have more, by the way. I have yesterday's high. Remember, 17 was the target, or a target yesterday, not the target. It's just a target. And then coming up here, so ETH high. So my initial idea was to get into these stops and then test here. So I'm just telling you. So that's it. That's the first trades. So let's look about the long. Let's talk about the long. So now market opens. This is wonderful. Now, what do we do with this? Now, I'm thinking about getting long, and I'm somewhat perplexed because this is a dangerous place for me to trade. And the thing is, if you're opening in very close to value, you had an inside day, or opening underneath the fair price, what a volume point of control is, it's a fair price. It's created by high volume. So the last auction's the ETH. That's the fair price. Yesterday's auction, this is the fair price. So I'm in here. Well, when I open in the middle of this, what might we do? We can go here, we can go here, and we can just fiddle around. So for me, it was the fiddle around move. So I am very patient. I'm just talking about me. I used to be, oh, you got to buy this, you got to sell that. And I'd be a whirling dervish and I'd hit my loss limit, 10 minutes would go by and I'd be, what happened? Why that, So trading is not mechanical. The number one element in trading is something called context or condition of the market. The context drives everything. We overlay our trade plans are developed specific to the condition of the market. So you might trade the market one way on a different day, and then next day you have a different plan for it or where you will execute. In this condition, I'm not trading here. I'm looking at this and I'm going, well, this is two-sided trade. Now I see what looks like an upward skew developing right here. So I'm looking at this and I'm thinking, well, maybe we're going to go up here. So that's what I'm thinking. I'm thinking, well, we might go here first. So, but I can't get long here. I have settlement. That's one level, but I'm just in between. So, I was perplexed. So I just wait. When I'm going, I could do this or that. And I have somewhat of a slight downward bias, but I'm looking for the long first and then potentially to get short. That was my thinking on this thing. So this is called VPOC migration. And I always suggest to developing traders, do not trade this because it's advanced. What's advanced about this? Well, what does it say? Let's look at this. In a different configuration, this is a long. So mechanical traders who don't understand context are going to start taking longs. So this is where I always advise, and all I can do is recommend, and that is don't trade this until you're already profitable with other structured trades I've shared or you've developed on your own. Because if you don't understand context, and that's, I think, one of the hardest things to get your brain wrapped around, this will do damage. So narrate what it says, but do not trade it. And I can only keep repeating it because if you're trading it, you're compelled, that's called FOMO. So you got to come to terms with FOMO. So let's look at this. This is called the variable high volume node. So now you have your statistics, and now we're going to narrate the condition of the market. And I'm going to show you some interesting stuff, I think. When this VPOC starts moving around, all it's doing, this yellow line, is measuring the volume. So as more volume comes in, it's going to move with the volume. And you can see there's more volume here. Don't forget, it starts at 0 at RTH open. So as there's more volume, it's going to move higher. So as the volume comes in, it is suggesting maybe this is too low. Also, we got to label this. It's the opening swing low. And here's something that you need to think about. If we open in balance, we can anticipate two-sided trade, right? That's what we had yesterday. Well, if I find the low and I cross above, now where's my swing before I come back inside? That's going to create the boundaries of opening swing high and low. So let's look. So all of this is suggesting to me that we're going to move higher. Now I looked at this. I looked at this. This is another variable high volume node. It's right there. So I'm seeing price and volume moving higher. That is suggesting higher. Okay, brilliant. So, and I'm thinking, well, maybe you should have got long, right? It's always clear in hindsight. Watch. So my thinking, I'm going to tell you what I was thinking. You shoulda. The shoulda. And here's support. So the problem I have with the trade, so you know why I didn't take it, because I'm going for this. There. That's my target. So I don't have location. I have structure. So what this suggests is, and I know this is the opening swing low, right? So now I come back to a location. If I took a long, I'd be getting in here, and that's my obstacle. So it didn't qualify for me. And the best I have, not the best, but the primary target is ahead of here. So what I'd be doing is, if I took a long here, I'd be breaking a rule, which is my trade plan. And that's like, something I don't do if I can help it, unless I lose it. And if I lose it, I make an error. I kept track of my errors many years ago, and I found out that the cost was so high. I wrote a check out and put it on my monitor, and it was, 5 figures over like a couple months and stuff like that. So the point was like, let's not do that. So I just let trades go. There's always another bust. So anyway, this is the target. Didn't get it. So now I still have that 82% probability, but now we got the opening swing high. And I thought, don't forget, there's in my brain, the chatter is, you shoulda. I call that the lunatic. Hyde. Jekyll and Hyde. Hyde is great in hindsight, but not only after the fact. Do you know that voice in your head that says, I shoulda? Well, what shoulda you do? You shoulda follow your plan. That's what you shoulda do. Now, the opening swing low is here, opening swing high is here. We take them out, and where do we come? Right here. This is the naked volume point of control, retail price from yesterday. And we have our ETH low right here. So right here, I'm looking at this, and I'm going, well, I got the stops out now. I got my stops here, and I got an 82% probability. My naked volume point of control has a 68% probability. So I have 68% probability to go there, 82% probability to go there, and I'm clueless like everybody else. Let's watch. This set up along, because this is a structured trade in the TraderLab. And it's a mean reversion trade, underline the term mean. So the scale is going to be here, and then the target is here, and possibly out the top. Okay, those are the longs. So that's my long. Into this, the opening swing high and the target. And I took this. I want you to know where I got out of this thing. I had this liquidity. And I want to show you the liquidity. I made a note about this because it was very interesting. Let me show you this. Now, luck of the draw. This is luck. So I know I have an opening swing, and I know stops are above the opening swing. I know I have an 82% probability to go here, and I was just lucky. Now let's look at this. So I have my target here, 82%, and I have this 82% to take out previous higher low. So I'm going, remember, I'm going this way. However, I still have an orientation that is telling me, based on some other analysis I do, that I should be thinking short. So I got longs and I got shorts in my brain. So it creates a bit of a conflict naturally. But I know that based on just the open, that then with this probability in the opening swing, 75% to get there, 82 there, and 82 there, I'm still leaning here. Now let's look at this. I wanted to point this out to you. This here is resting in the book, from all the way. So I saw it sitting there, and I'm going, well, somebody's got a big order resting out here. 600 and change sitting out here at this level. I think I'll scale in front of it. So I was just lucky. Now, this comes in. Notice when it comes in. This is how order flow can help you. Somebody is front running this, don't you think? Why are these orders being added here as the market comes up? Well, and who is it potentially? Well, it might be icebergs that want a front run. They're limit orders. Okay. So I get scaled. And where's too low? Down here. Watch. I have a sweep. This is resistance. So I'm looking at it again, and I'm going, well, teeth are chattering. I have a sweep. This sets up the potential. So I get a counter rotation. Now I'm looking for a long again to come back here. This is coming here is reversion. Coming there is reversion. I'm trading reversion inside a reversion. So outside to there, and then maybe out the top or maybe out the window, right? So this right here sets up this. Now I don't have a long, I have this and I have the ETH low. So I don't have anything now. Let me go take a look at where I got into this thing. Hold on. Gotta go back. Oh, yeah, it was. So I get another sweep here. I've now got my ETH low. I've tested this, and now remember, getting the ETH higher low, and I was shooting for the high, don't forget, is a 97% probability. The stats favored the upside, 76%-ish probability, and getting to the ETH low is a 54%. So I want you to understand why I had the long skew. I still have over an 80% probability to get here, and I have over 80% probability to take out. So that's yesterday's higher low. So based on what's going on here, if I can regain this, and I got that, I can then come back across the range. So I took a long here. Scale there. This is mean reversion. And then I'm going for this. Same thing. And this stuff. Now, here's something also I want to point out to you. And I never know, of course, what's what. This is in the book. This comes in. There's your reaction. There's your selling. There's your icebergs. I come out here. I get my sweep. And I'm looking at this. And I came really close to taking this long. But my entry, let me tell you why I didn't take it, because it's just as important to understand. This is all a trigger for me, right here. By the time I enter, I'm entering right here. So again, my plan says, too bad, doesn't fit, because that's where I have to scale. Okay? So you're going to see the same thing from a slightly different location. I just want you to understand that in real estate, it's location, location, location. Statistical probability open. Remember, right? 67% here, 98% probability, ETH higher low. Pick one. And then we have the IB higher low, also about a 98% probability. So I know if I'm leaning down here, if I don't come all the way across the range and get through the overnight volume point of control, which would be my target from out here, there might be trouble, but I don't know about trouble. Let's watch. Sweep. Now I have the range. Notice the difference. This is the same trade, except it did not qualify. So I have nothing to do. Sitting here, teeth chattering like everybody else, and there's my sweep. Now I'm using order flow. My liquidity is here. This is the reversion, so I'm going outside in. This is the primary trade I suggest developing traders learn in TraderLab. So I have my sweep. I have my pullback. I have a trigger. It's right here. I get long, scale, there, helmet on. This suggests potential counter rotation. My stop is under here. Got to take me out. This suggests up. Let's look at some behavior here. This is a sweep. Sell sweep, up. Obstacle. Reversion. Breakdown. Takes these guys out. Notice the stops coming out. Sailing air. Could have been me as well as anybody else. Sweep. There's your rotation. Scale, right? Sweep. There's your rotation into support. It has to hold this sweep. Here, if it's not going up, it's got to hold this and go south. What do we get? Rotation, rotation, sweep. What do you get? up, scale. So the long was here to scale. I saw this. I was not thrilled. I go, well, that's life, you know. Back here, got to clear this, have the sweeps, adjust at least that. And it doesn't mean it will. It means it might. Remember, everything is maybe. And then next target is this. Back here. Also, I noticed this pulls. Okay. So I'm looking at this. I see the liquidity pull, and I'm thinking, well, that's good for the long. I get here, next scale, and again, going for yesterday's high and to come up to that low volume area. So this is just, I'm just trading my trade. I don't know, you know, I'm as clueless as everybody else. Not ignorant, but definitely clueless. Now here, this is, let's look at the concept. If this is too low and I got my statistic down here, then the possibility is to come here. Is this too high? Notice how it was too high there, too high there, too high there, and then we take out. So now it's not too high. Now we come back to the ETH volume point of control. Notice what you have in front of you here. You have this naked volume point of control, the retail price from yesterday, too low. You have the developing volume point of control, the current fair price. So the market does something called mean reversion. If this is too low, it's a reversion to the mean. This is a mean. If it's too low, I revert to this mean. If this is too high, I can come back here, fall under it, do whatever we're going to do. If I come up to the other mean, this is the last mean from the ETH. They're all the same thing inside of each other, trading in multiple time frames or fractals, depending how you define it. Now, this is the target. And what are we doing here? I'm going for this. Remember, yesterday's high or low? Do you feel lucky? As Dirty Harry used to say, 82% probability. Still going for this. So I got this target, 82. And then there. So you understand. Now, so here I get my sellers. I have my liquidity here. I'm going to put a little box around this thing. This is something I do for myself. And the reason is when you have resting liquidity, who is putting their liquidity out there? Well, look at the icebergs. Now I'm going to show you something else. Now right here, no clue. You know, it's like, all right, everything's great, having a good time. Get the champagne on ice. So I break through this, and as far as I know, again, I'm targeting this. Now, I come back underneath this. Right here, and I don't, now here's the conflict for me. I'm looking to squeeze out these guys and then potentially go lower. And again, I have no idea. It could just, you know, go up. So I wanted to go here. When I say wanted, I mean, that was my plan. Doesn't mean it'll do it, right? How many times did you guys put a trade on it? Doesn't do what you think. It might. Remember, the best you have is maybe. Right here, I have this, I have this, I have that, and I'm going, come on. And watch. Comes across. Right here, the trade's in trouble for me. So right here, I see this, and it's really got to hold this, right? Actually, I got to label this for you so you can see it. Forgot to do that. Here. So that's, I call these variable high volume nodes, and they're just the position of the auction. So I know if I come over this, which was too high, it can act as support. It's resistance on the way up, and then it can become support. And support then would be right there. So for this to go up, got to hold this, clear this, and off you go. Right here, hasta la vista, thanks for playing. We'll send you a coupon to the buffet. Out. Now what? Great. I'm going, huh, isn't that interesting? So now I have this, and I'm back in balance. So instead of coming out and getting these stops, I got to the overnight volume point of control and I got taken out of my runner. So that's going on. Come on, right? You ever talk to the market? So now I'm, and I do have a bit of a selling bias. So it's kind of disturbing, you know. So now I come back here and I test this again. Well, I know I had a sweep here and I had a sweep here and I'm back here. This has to hold. And if it does, then I have the potential to come here and rotate. So that's the potential. Let's see what it does. Break. Now, 930 is the IB, the initial balance. This is the IB low. So this is the outside edge. And we have a couple of structured trades I'm going to talk to you about in TraderLab. We have something called the IB continuation trade, which is a short. And let me tell you why it would qualify. Number one, we got here. We failed to squeeze out the shorts. And I have a little thing I do, and it's a narration. When I built trading systems, I wrote code, and they were conditional. Because the conditional statement puts you on a track of logic. If you were writing, so if this, then that. If we clear this, then that. If we don't, and we fall below it, if not, then what? Then too high. There. Then what? Well, we don't find our buyers again here to come back there, then trouble. You notice how we found our buyers here? And it tried to come back, didn't do it. So I want you to understand that we can anticipate behavior. We can't predict it. So if that's too high, we go there. If now we got the fair price. Now where's too low? If this is too low, we come back here and then possibly do this. Or what's under here, guys? Let's remember, what does the market do? The market goes down to go up and goes up to go down, and then goes down to go up. And if we don't get there, then we go up to go down. Now, what's important here, this is a swing. So that means anybody who's in this leg has their stops under this outside edge and maybe here. So that's why when we got there, it might have been an inventory grab and there was absorption here. Okay, iceberg. And there's the stops coming out. And the retail traders to put their stops there and there. That's retail trader behavior. Think like a retail trader. Just don't act like one. So this is where the buyers came, and this is where the sellers absorb. So you have see the red delta? The reason it's red, you have market orders. Why didn't it go down? Because there's an iceberg right here absorbing it. We get our buyers. There's the buy stops coming out. What's taking the buyers the other side? The selling iceberg. We break out underneath. This creates the IB trade. Now, there's two IB trades. One is called the IB continuation trade. Why might it qualify? Let's put some pieces back together. What did the market do? What did it not do? What did it do? It got to the retailer fair price in the ETH. It did not take out the stops up here. It did not. 82% probability to get there and 82% probability to take out yesterday's higher low. What happened? See you later. Thanks for playing. Tom, you get a coupon to the buffet. And IB low is here. Stops are under this leg. Now I break below it. Now I'm going to show you, actually a couple trades. Some are a little more advanced, but you'll see. So right here, we break the IB. So now I'm looking for a short. And I have to wait for a retracement. I'm sitting here, like everybody else with my jaw on the floor. So now I have yesterday's low. And now this, I did not get short here. Didn't do it. Wasn't able to do it. So I was looking to sell a retracement here, and it just ran. Once it runs, even though this is my target, I got nothing to do. Just doesn't matter to me. There's always a bust coming. Now let's look. So my next trade is going to be out here. Let's look at what happened here. Now I'm going to take you into profile world a little bit so you understand the auction. This up here is an auction. So too high, too low, too high, too low. Retail. Retail means highest volume. Just think shopping. When you shop, buyers and sellers agree on the price at the retail price, high volume. When it gets too expensive, it shuts off the buying. When it gets too low, it shuts off the selling. But what happens if we find a price that at this time is not fair? If we leave this distribution of volume, this now becomes resistance when we break out of it. And that creates something called a low volume node. I'm just going to throw this over here so you can kind of see it. And you see the volume at the right, it says 611. That's where the low volume is. So let's think of this, what it means. What it means is the market ran through this area, took out the stops under here. See the stops? Stop an iceberg detector. Great tool. 698, 93 longs taken out, and a sweep. When I see the sweep, here's the possibilities. What do we see when we see sweeps? Often rotations. Where's my rotation? Nada. Okay. So now I have an outside edge. I'm not paying that. Okay. And now we break away. We get the target, which unfortunately I wasn't short for, life in the fast lane. And now I'm saying, okay, I have a naked VPOC here. Not likely, but hey, who knows? Not my job. But I have this. This is now the new distribution. Same thing as that, except now I'm over here. So this now is my resistance, and out here is the outside edge. Now let's come a little bit and another little idea here. This right here is high volume. Let me give you the exact number. I just want you to kind of get a sense for some of this stuff. It's around 94. Just going to throw this in here. I'm going to show you a fractal or a microstructure. So this high volume node that's created by this is the same as these variable high volume nodes or the VPOCs or that or this. They're all high volume. So if I find an outside edge and I have the IB, which is here, I can then, if I come back here, I can sell this to come there. That's the trade. That's all it is. Let me show you the trade. This is the trade I took. This is the IB continuation trade. Now, I'm taking it only as a reversion trade to here. That's all I'm trying to do. And the reason is this 82% probability target was already taken. If it was open, I'd be taking this trade there. So if yesterday's low was down here, wherever the heck it was, I'd be going for that. But since it's already taken, I'm not trading it. What this says potentially in the auction is that's too high, this is fair, and that's too low because the selling dried up here. And we got what was under yesterday's low? Stops. So that's what I call fuel. When I get the stops under yesterday's low, that's why it would be a target. So the better trade, if I could have gotten it, would have been short from here, which I didn't. So I take this, but instead of going for the stops, I'm going, and this is called mean reversion. So I'm trading inside. Here's a sweep. This suggests potentially lower, and I'm only going to there. I'm not saying it's a good idea. I'm just saying it's an idea. And where was that thing? So I got a scale, and I think it was around 94. Yeah, hold on. And I bailed out of it. And I'm going to tell you why. So I know my support is right there, right there. There's the high volume. And all I'm trying to do is come back to high volume. My actual high volume is sitting actually around 94. Right at 94. You can see this nodes. It's right there. So I'm going for that, and I always go a tick or two in front of it. Miss me by one tick. All right. I see my buyers here. And when I see my buyers, to me, I see this as too low. It's mean reversion. So the short from here is to there. That's all it is mean reversion, and missed it by a tick. This is one of those things where you go, you're frustrated. It's just trading, So I see the buyers here. So what did I find out? I found out that this is too high. Now I know where too low might be, maybe, and I'd say maybe because who knows. So if this is too low, right here, actually, now I know that too high, too low. So now if I have too low, I can start to think about leaning on this to get long to mean revert back inside. So let's see. So what was too low? Wasn't it out here? Out here? It's really like right there. So for me, it's long now, only for reversion trading. And the goal is to get there. I see we're in real time. So short to there. Notice where we come back. Here, sets up your long. And the idea is to get there. Holds here, gets there. And now this trade, wherever it goes, it goes. So it would be, this is the primary target because it's mean reversion. So let's look at mean reversion. What did we do? Early, we came down here, we went up. We went to the overnight volume point of control, tested it, that's reversion. Too high, missed us, came down. Get under here, sets up the stats to there. Get back above here, and this is where the target was for this thing, and we test it. It sets up the long back to there. And then that could be it. You could just be trading back to these. Now I'm going to look up, see if you guys have any questions. Thanks for your patience. If you're finding this a hard day to trade, it is, only because you have to know the condition of the market and just be patient and wait for your trades. This is not a business of a lot of action. It just isn't. It's a business of patience. How are we doing in YouTube today, everybody? Strength level indicator. I don't use it, Ollie, but that's a great question for Bruce. He covers all of that. Bruce is our lead educator, and he focuses on order flow. And he streams all markets. And I think it's Monday, Tuesday, and Friday. Don't quote me on that because it does change. But you can see that in the schedule. And there's loads of YouTube webinars on these different elements. In fact, if you go to the knowledge base in bookmap.com, you'll see what this does. We're in balance, guys. Let me turn some levels on and let me take a look if you have any questions. Thanks for visiting TraderLab, guys. And today, how do you trade a day like today without really hurting yourself? Patience, plan, and not a lot of trades. If you're finding yourself taking a lot of trades and you're over trading, you're going to hit a loss limit, and hopefully you have a loss limit. because there are going to be days that don't align with your plan. I have a plan for this, and I don't trade it the same way as I trade other days. Most of us use, think that this is generic and that the market is going to fit into what we do. Well, how about doing it the other way around? You adjust your plan to what the market does. What are we doing right here? We're still in a reversion pattern, coming back. Now, for me, I'm extremely patient. The other part of it is I trade for range. So when I get into something like this, for the most part, I can't trade this because I can't enter out on the head of a pin. I just can't do it. Love to do it, not my thing. What do I know right here? Let me show you something. Now, I'm getting into stuff that's really more nuanced, and for most developing traders, it's just not worth the trouble because you're not going to yet understand it. Right here is a node, a high volume area. This acts like a volume point of control. Out here is a low volume node. It's here. So this is the outside edge. So we were trading, remember, short, down, just right. If I get back above this, then I'm looking at that and possibly even back here. Not my concern to get there. I have to I have to get back above here. May never do it. Not my job. Doesn't matter. This is too low right here. It's a microstructure. So what do we know about this? And this is very nuanced. It doesn't mean anybody ought to trade this. What do I know? This is the fair price. If I have rejected this, which is my high volume, and there it is actually, so it was off just a hair. So I just want to show you the short I took and what happened with the thing. I think it was here. I don't remember. No, it wasn't. It was this. See where the target was? There. So I always go a tick or two in front of it and miss me. Okay. So that's short. So now what do we know? Too low, and this acts like a volume point of control. So let's just look at the behavior. If this is too low and we couldn't get to it there, does that operate the same way as what was too high? So if it's too low, I have absorption here. I can look at this and I can look at my high volume node, and that's my support below. So this and this low volume node. And this is mean reversion. So the thing with this is, and these are more advanced processes, but mean reversion is outside in trading. The thing about mean reversion is, if you're mechanical, you may have a problem because once we're trading on two sides, the typical IBF, which is a inside trade, outside in trade, or the IBC continuation trade, is not necessarily going to be your friend. What is your friend is these nodes. This is an auction. Too high, too low, and then if I get above it, then my next place to go is here. So I can be buying the outside edge to come here. If it qualifies, then I have range. See what it does? Now, let's watch it. Isn't my support now here? You see? So if I'm, other than this, again, here, if I find too low there, now I have support. So I can be trading outside in to there, outside in, outside in. Okay? This is mean reversion. Now, if it's not your trade, then there's nothing to do. You just hang out. But if you're in balance, IBC, IBF, the IBF makes sense to me because it's a reversion trade. Okay. So, but where's your outside edge? It's out here, you see. So if you're taking a reversion trade, like here, you're trying to go there, but where's the risk? Out to here, because that's the last swing. So if you're just mechanically taking this and putting your stop under here, not so good. Where's the outside? Isn't it there? Does that make sense? I'm going to take this out of here because it was at the IB. So the short was against what was the low volume node. Low volume node is moved. It's no longer there. So doesn't. So this, remember, can you guys see why this might be support here? Does that make sense? And if you have questions, post them. I'll take a look now. And thanks again for your patience. I can't see the questions. How do you populate IRT levels? Fairfax, IRT will export levels to Bookmap. And if you go to knowledge base, it shows you how to set it up. Also, if you go to linsoft.com, there is a forum for the TraderLab, and there's charts you can download there that are all set up that will work in your Investor RT and also export these levels. So these all are updated in real time from Investor RT, so I don't have to do this manually. These are manual. I just put them in. They're a higher time frame, so they don't change during the day. These are real time, and by that I mean I put these in as the market develops. This is also generated from Investor RT, and it measures where the high volume is and the low volume. Low volume is out here, and that's all coming out of Investor RT, so lets me know. Okay, low volume. So if I'm getting long, this is my outside edge. That's where my risk is. This is where I'm trying to go. Once I understand that I found too low, this, then I can just take long. Okay? Does that make sense? How we doing in YouTube? Please give a like. I hope you're getting something out of this. This is the market, guys. It's nice when we have these running markets, but the thing that's very hard for most retail traders is mean reversion. Now, the thing to also understand why you might want to hang out in the TraderLab and learn mean reversion is most of the time the market's always reverting to a mean, and the means are in multiple time frames. That's why we can be trading mean reversion and going in different range and different rotations. We do have a possibility, and I'm not saying it will, it's not my job, to come out the high and squeeze. We have major reports. So what might this do to us? Well, if we're in two-sided trade, what about the guys who are short? Stops are up here. Now, I don't know if it's ever going to get there today. That part is not my job. My job is to trade my plan and trade to structure based on the way I experience the market, and most traders who understand the market, and they don't have to use a profile. The profile shows us what you can't see in price or on a candle by itself. It's showing us volume and price, because the price down here where the volume tapers off is not equal to the 11,000 contracts that are up here, and there's 240. There's a price and there's a price. Are they the same? No. Well, if I can look at the market and I can see where volume dries up, why is there less volume down here? Well, we ran out of sellers, so the market didn't stay here. And I have a sweep. If I know this, now I know I have an outside edge. Now, when I rotate and I find an outside edge here, now I know the high volume in here which is the retail price in this distribution of volume. It's called the distribution. And another way for you guys to see this is something called consolidation. They're the same. So a consolidation is an auction. Buyers are here, sellers are here. This is absorption. This is absorption. Which way is it going? I don't know, Tom. Break high. What does that tell us? The buyers that were here, where this sweep is, who bought it here, went, oh, really? You want to give me some more? Thank you. And they buy it again. This is your change in behavior. This now, where the sellers were, becomes support right there. This can be a potential long, and that was my short to get back to this. Okay? So what you could have done with this is, I don't pick the bottom of anything. It's just not my deal. You could be long here to there, or you could be short there to there. Either one. I just took the short. But I wasn't going for this. I was just going for that. It was just a quick, and that one didn't do its thing. It got, within one tick to me is pretty good, but not good enough. That's just the way it goes. That's trading. Did not take a stop on it. Made a few burgers. And then we come back again. What's too low? Isn't it out here? So if this is out here, and I know my buyers are here, there they are, and now I have structure up here, and an outside edge is there. So you can be looking at it to buy it, if that's your plan, to come there. All these are the same trade. You just have to learn them, Does that make sense? So these are all reversion trade. How are we doing? Does this make sense? Randy, IRT will export whatever you set it up to do. So it has levels for anything. You guys have questions. This is TraderLab. You can learn this. Now, the thing about this is, you don't have to be doing any of this. But does it make more sense to just wait for a trade that you recognize behavior and not to be impulsing, chasing the market round and flip-flopping like a flounder on a dock? Remember, major reports are coming out now Wednesday, Thursday, Friday, and the market will react to those reports. We took out yesterday's low. Now, I can't predict anything, so I don't try to do that. But I have observed behavior over the years, and I'm going to share just a incidental piece of material or behavior. The market tends to go down to go up, and it goes up to go down. What do we know? We know. We don't know what's going to happen, so we're just going to leave it at that, okay? We don't know. What we know is we took out this low. This is the fair price from the selling day. We tested this yesterday in the ETH, I believe. Brain is gone. Let me look. So yeah, we tested that in the ETH yesterday, which set up our potential longs. We did not get back there today. This is truly a support level. Now, yesterday's low in the RTH, we got, but we have not gotten back here. That is suggesting that we can go higher. That's another reason why. And this is today's ETH early, and we tested it, the 03. That set up the lean to the long side. I'm giving you again, I'm going back to where I started the stream. That's all why I was looking at the long. And of course, part of trading is randomness. We took out the low. Well, I still have held this because this was tested in yesterday's ETH. I'm above this. It still gives me a long skew. That's all I can tell you after all this. So that means potentially we can take out yesterday's high, and that's my orientation. It's kind of like the market does whatever. And if I could take out yesterday's high, it might, and again, might is a big word, it might come back up here. because this is that low volume zone that isn't quite filled in yet. So we might just come here. My targets for today, and again, when I say mine, it's just maybe. Maybe we'll do this, maybe we'll do that, maybe we won't do anything, is to get here and here. And not necessarily take out the all-time high, to just get in here and wait for reports. That's my plan. I'm sticking to it, and I'm clueless, but not ignorant. You guys have questions. Is it logical to see how you can look at the evidence, put together a plan, and then adjust your plan in open field running, keeping in mind what the possibilities are, but adjusting to the real-time market development? Is this making some sense? Leah, a weekly TPO chart? I'm not sure which, well, TPOs. No, there's an RTH TPO, and this is ETH. So these are just full session. That's all they are. And all I'm really looking at is the ETH as how it relates to the previous RTH. So this is yesterday, but it's full session. What's important about yesterday is this. What's important about today, ETH, was this. Okay, we got under here, then it's RTH low for the stops, and then if we come back here, we can still come up and fill the low volume zone, which is this. This was the target for yesterday and there. This is why we were looking for longs yesterday, to fill this in, this zone. So today I was looking for yesterday's high to fill the zone. And that's my target, around 23 to 25, up in that area, because that's the zone. So here to here. So what did we do? We took out yesterday's low, got the stops. Now we're coming back across. If we come back across, we can now come out the other side and come here. And then that's as far as my thing goes for today. And it doesn't mean, it could do whatever it does, right? Anyway, I hope that answers your question. So I do look at the full session, but it's really about the ETH. It's not the full session as much as it is the ETH and how it relates to the previous session. That's why all of this was suggesting longs, though I had now I know I'm saying I have a preference to shorts. I'm trading longs, but it's just the way it might play out. So part of it is just adjustments. So we'll see what it does now. This is your outside edge. This is mean reversion. And the short out of wherever it was, I can't remember anymore. I think it was here to here, was also mean reversion to a different distribution. So outside to there is reversion. Short here to there is reversion. If it's too low, it becomes support, sets up reversion. If that's too high, sets up counter rotation. If this is still too low, sets up potential reversion. See how it's working? Does it make sense, guys? Can you see the reversion? And Leah, I hope I answered that question for you. You guys have questions about this. You use the link in the bottom of YouTube. All I can do is share with you some ideas. And so this business is about isolating one trade. You only need one. And you may think, well, gee, I want more. I want you to hear the word want, and let's translate that to FOMO. So how about wanting an edge and the ability to develop the discipline to execute it when you're right here, and all you have is maybe and uncertainty and fear? I'm fearful. Are you fearful? I'm trading 46 years. I am fearful. Now, let me tell you what that really means. My primal wiring is telling me you could get stopped out. You might take a stop here. Do you ever think that? We all do. That's fear. So I understand that. So when I hear it, I filter it. I go, well, that's nice. Thanks for that. That's my primal wiring. That's the job of my primal wiring, to save me from the saber-toothed tiger. It cannot differentiate, between this and the saber-toothed tiger because there's an unknown here. Is there a tiger behind the rock, an apex predator, or not? Well, I don't know the answer until I look behind the rock, but I'm still going to have that primal wiring is still going to react to the uncertainty. So as traders, we spend our potential development looking for certainty, and we've all done it because it's natural to us to seek certainty and avoid risk. So when we intentionally take risk, we're pushing back. By the way, this is an important level here. I got to extend it. This is where this is important to remember. This level, we can come back and check it. Okay. And if I clear this, I got this, and it's possible. And if it doesn't matter. The primary trade is there. It's mean reversion. So if, depending on your plan, you could just be taking this there to there, there to there. And if I clear, I got to clear this. This is the next area. And then maybe out the top or maybe not, right? If you're in TraderLab, if you just took this to this, would you become a profitable trader? You could do this with a 2-lot. And the way you would operate, subject to your plan, is this is a long, leaning against this volume. The buyers are there. There's the absorption. The high volume is here. The structure is there. What about this one? The structure is here. What about this? Sorry, Tom, my short. Only going for this. So I wasn't even, looking for anything more than that. That support. Once you know the buyers are here and that is too low, which is out from there, you could be looking longs to there, longs to there, longs to there. And where's the stops? Over here, first hour's high. So the shorts have their buy stops here, and we could come up and still take that out. There's a 30% probability-ish that we take out the first hour's high and low. So it's 30%-ish, could be 29, don't hold me to it. And then we still have the low volume zone to come up in here. And we don't have to. So that's just another possibility. And that would be called the neutral day. And a neutral day really reflects a market that's just balancing. So what did we do? We took out the weak longs. Does that suggest then that tomorrow or this week we're going to make a new all-time high? Make a note of that. Does it suggest that we might make a new all-time high? It's not a recommendation. It's not a prediction. What I've observed over many years is that the market tends to go down before it goes up. And it also can go up before it goes down. It takes out the weak side often before it makes a substantial move in the opposite direction. So for this astute group of traders, let's see if it holds this time. I cannot trade that, but I understand market mechanics. And if you come to TraderLab, maybe you'll get a better understanding of how the market works. There is no plug and play, and there is no easy fix to randomness. I'm sorry about that too. What there is, and this is what works for traders who understand the business of trading, is edge. You need to identify where your edge is, and you can do that using the structured trades I've shared in TraderLab, and you can reverse engineer one of them. There's 60 PDFs of these things, but the most primary behavior is this. In all fractals or time frames, it's always rotating, right? So if we have the bullet train, that's a different configuration. It's a trend, different plan. But in this, it's rotations, outside in, and you can slice it down into any time frame you want. As you can see, longs to there, and looking here and then maybe out there, not a recommendation. That's trading. Might be boring, but it can be profitable if you are patient and you look at this more not as keeping busy and responding to your impulses, which you will have, but the being intentional. And because I know not what the market will do, I know what I will do, but I don't know what the market will do. And if it doesn't fit my plan, I just wait. There's always another bus coming by. So now once I start streaming, I don't trade. So that was my last trade. So, but if I wasn't going to stream, my next trade, and I'm streaming at 10:30 Central Time, my next long would be here. It could be there. It could be there. All these are longs that I would take, not a recommendation. I'm just saying they're all the same trade. They're all reversion trades. If you understand reversion, how many trades might you have? And you are going to take stops, so we have to get over that. Where's my next target up here, by the way? If it gets there, no clue, is there. Why? Why, you ask? Here's why. Where's the fuel? Where was the selling? It was here. What's above here? Stops. Where might I come? Test this. So, next. Or we just stay here. And I couldn't tell you which one. It's not my job. So at the moment, longs only for me. And I'll always have to say it's not a recommendation. This thing could do the Acapulco cliff dive. A tweet. Somebody has indigestion. Anything can happen. This is trading. Hope you're getting something out of this. Leah, if you're interested in TraderLab, there's a link in the bottom of YouTube. Click on that. It'll take you to the Bookmap Discord TraderLab community. You do have to verify your username. You'll go to a landing page. It'll say verify. Just follow the directions there. It'll send you a little code that you enter, and then you will gain admission. There's no cost for it. You will not be solicited. No spam. No nada. Zippo. You won't hear a peep out of anybody. Come to TraderLab. You'll find it there. And then when you get to TraderLab, ask, and they will direct you to the library of webinars, the TraderLab community, of course, the document section, the 60 PDFs of structured trades I've shared. This is what the TraderLab looks like. This is this morning around 7 a.m. And I post, charts, and a lot of others do too. Thanks everybody in TraderLab for participating. There's a lot of work here. By that I'm saying this is an advanced trader methodology. Now, don't confuse advanced with complex. We tend to make trading complex, thinking that complexity creates certainty. Complexity, from what I've found, creates randomness. So if you make it complex because you think more gives you more certainty, which is a logical thing, it doesn't. Maybe it does for you. Never did for me. But I spent years trying to make it do that. I just thought I had to work harder. So this is the community. This is the library of webinars. Thanks, Ned, for curating this. This is the primer webinar. So just a high-level overview. It's got about 33,000 views. You might want to take a peek. Meet the TraderLab. It's an advanced trader methodology. Now, the thing about this is there's a lot going on. Mutual support. There's a lot going on, data mining, a lot of things. A lot of these statistics and the information and structured trades you see are what I've shared. There's other traders in TraderLab that share what they do. And everybody has to vet everything. The idea is to create a business plan and treat it like a business. This is not a video game. Now, you can approach it that way, but you won't most likely be here. You'll be a statistic. This is gaming. And I can assure you the casinos don't change the games. If they pay a gambler on the last hand, do they change the game? No. They expect to pay the gamblers. Every business has costs of production and overhead. What happens when you pay a bill in the trading business? Do you get revengeful? Do you not take the next trade because psychologically you're still in the last one? Do you move your stop to break even if you take a stop on the previous one when your plan says don't? You're doing that. Stop gambling. Start winning. You should be looking at these things. Now, here's the document section somewhere. Where to go? Yeah, doc section. Structured trades, download these. Steps, stats that you have to vet for yourself that I read at the beginning. My settings and Bookmap, opening context alignment, a lot more. And a lot of other contributions by everybody in the TraderLab. TraderLab's not about me, it's about you. If you're interested in the TraderLab, use that link in the bottom of YouTube. You don't have to be a Bookmap subscriber now, ever, never. You won't be solicited, nada. What you will be is gain the ability to participate in a serious business-oriented community. Not romper room. It's only for serious traders. It doesn't matter how long you've been trading. That is not the issue. The issue is if you've been trading, you are experiencing the same things we've all experienced in our development. For me, I coined a phrase for it, Trader Groundhog Day, working hard, waking up in the same place. I spent years with that because I thought that I could just get my indicators to do the heavy lifting, plug and play. Ask yourself why your higher time frame software tool has 150 or whatever number of indicators in them. Why? Here's why. They all work randomly, so we think we just have to make it better. I did that. And then I said, well, I can really make it better if I build a trading system, and the trading system will now optimize it. So you take a chunk of data, go back maybe 6 weeks of data, optimize on 4, do a walk forward test on 2, and now you trade today. How's that supposed to work? What does today have to do with 2 days ago or a month ago? I'm going to say not too much, yet that's how trading systems tend to work. So at the time, that was the state of the art. So I always was pushing the state of the art as it developed. When I started in 1980. We didn't have PCs or an internet. I shared an office with George Lane. He created stochastics. So oscillators. I thought that was the holy grail. No, not so much. So everything worked. So I said, well, this is great. Let me make it better. Well, there goes a couple years down the toilet. And in the end, I always got the same outcome, even though I always had winning trades. But over time, the ball, in spite of winning weeks and winning months, it still was not sustainable because I was chasing the market from behind. I was not in here. So I had to eventually, and it was not easy to do, throw it all away. And then I learned market profile from Peter Stottlemyre, the guy who created it back in the mid-'80s. And then even then, I was still using indicators, and I botched that up because I was trying to get the best of what I believed was the best of both worlds. And unfortunately, I was just sabotaging myself. Trader Groundhog Day. So if you're waking up with Trader Groundhog Day, don't feel bad about it. The thing is that there's much more information available today. And the problem most retail traders have, there's influencers, there's vendors all over the place. And one thing I have to say to you is, snake oil's been around as long as there's been snakes. I can assure you, you will get the straight oil from the can in the TraderLab, but I cannot assure you that you'll become a profitable trader because it's going to require you to change your beliefs. And that's hard for us to do. We want to be right, but if you keep waking up in the same place, it may have nothing to do with your effort. It may have to do with your process. You might be trying to solve for certainty in an environment where it doesn't exist. Have you ever considered maybe the thing to do is to attempt to solve for randomness? If you can solve for randomness, maybe you have an opportunity to create sustainability in the business. Please give a like on the way out. Thanks for visiting the TraderLab today. We are in a two-sided trade. The possibility, and it's not a recommendation, exists still to come out this side or to stay in here. Thanks again, guys. Don't forget to give a like. Appreciate you visiting the TraderLab today, and I look forward to seeing you tomorrow. Have a terrific day.